here along with Peter Schiff from Euro Pacific Capital, who, as we know, has never thought the world was okay. Ron, lay out your argument here.
Well, everybody's making a lot of arguments that, the world is coming to an end, that, interest rates are going to skyrocket, the stock market's going to crash, the dollar will fall out of bed. We have long-term, entitlement and deficit problems, which actually are improving, and that Russia is going to go to war with Ukraine. And quite frankly, when you look at what the markets are doing right now, they're saying the exact opposite. Gold has fallen $35 in 3 days. Stocks are hitting a succession of new all-time highs. Interest rates are quiescent. The dollar is mostly strengthening against key foreign currencies. I think the market's telling us that, at least for now, the world is fine and that there's nothing major on the horizon.
And you look like you got a tan over Memorial Day, so it's at least all right with you, Ron. But Peter, if the world is pretty okay, why do we have low volume and why is everyone else buying U.S. Treasuries?
Well, first of all, I never argued that the world is coming to an end. In fact, I don't even think America is coming to an end. But I do think the party in America is coming to an end. And I take exception to Ron's comment that the dollar is strengthening. It's not. I mean, take a look at where the dollar index is. It hasn't been strengthening. And that says a lot about the validity of this so-called economic recovery. If we really had an economic recovery, then the dollar would be strengthening. But we just printed a negative 1% for the first quarter. And that's not because of the weather. And the only reason it wasn't a much bigger negative number is because Americans were forced to spend a lot more of their diminishing paychecks on their electric bills, on their heating bills, and on health care. If it wasn't for that, it would have been a much bigger negative. And, of course, I don't believe for a second that inflation is running at an annualized rate of 1.3%. I think we have a lot more inflation than that, and so I think the U.S. economy is a lot sicker than Ron and a lot of other people believe.
Well, it's an interesting point that weather had nothing to do with the weakness in GDP, and yet, as Peter just said, people paid more for electricity. They paid more for electricity because they were heating their homes. So clearly, you can't have both those thoughts working at the same time. With respect to...
But that actually helped the GDP, and part of the reason is electricity prices went up. A lot of Americans were wearing sweaters because they couldn't afford to heat their homes.
Well, I mean, listen, inflation, if you look at bond markets around the world, they are pricing in deflation. If you look at every bond market in the world, the German Bund is yielding 1.3%. U.S. Treasuries are at 2.4%. You can't tell me that the bond market is getting the inflation picture wrong. The stock market's getting
we're not going to be lucky enough to get deflation.
Your favorite item is
inflation.
Gold. Why is gold falling?
The reason that bonds are artificially low is you've got all these central banks buying them.
No, you have pensions buying them.
Speculators that are buying them too.
No.
But I think this is wrong. Just like you had people buying up subprime mortgages in 2006 and 2007. They got burned badly on those trades. And I think the people who think that the economy is recovering and that we're not going to have inflation and therefore they're buying bonds, they're going to lose a lot of money on that trade.
Well, you're losing a lot of money on gold right now. I mean, if that's an inflation hedge, which you argue it is and could be going to $5,000 an ounce, it's going to $1,250 right now, and falling $30 in 3 days is not exactly the gold market telling you that either there's a geopolitical crisis or an inflation crisis on the horizon. I don't understand how you square the circle when gold keeps falling.
Well, I square the circle because most of the traders have it wrong. They don't understand that the economy is relapsing
back
like
into recession. Claiming to be Napoleon.
They don't understand that inflation is going to get worse. They don't understand that the Fed is going to stop the stimulus, stop the tapering, and ramp back up QE. I understand that. That's why I'm buying gold, and the people who are selling it to me, they're the ones who are going to regret it. People who are selling gold are making a mistake.
So far,
but of course, remember, Ron, I don't only own gold. I have investments all around the world. Gold is a small part of what I'm doing, but I believe that gold prices are going a lot higher, despite the fact that they declined recently. I think that decline is, again, another great buying opportunity because people who don't understand what's going on, they're the ones that are selling.
Okay. Peter, I want to ask you about one other thing you're doing, which is accepting Bitcoin. I know that took the street a little bit by surprise when you announced that a couple weeks ago. I'm wondering, how many Bitcoins have you seen come into your shop, and have you changed your mind yet?
Last I checked, we only had one person who bought gold with Bitcoin. But remember, we still accept dollars. As much as I dislike them, I have to pay my rent in dollars. I have to pay my salary in dollars. So I still sell my gold, or I don't sell any of my gold. My gold's not for sale. I'm a broker, so I'm selling other people's gold to my customers. I buy wholesale and sell retail. but we're still accepting dollars. We partnered up with BitPay. So if you have Bitcoins and you want to turn them into real money, you work through BitPay, you give BitPay your Bitcoins, and they give me dollars, and I ship you your gold. And then, of course, any dollars that I have left over as profit, I use it to buy more gold for myself or more foreign stocks or other inflation hedges, because the last thing I want to own personally are U.S. dollars.
All right. Got to go, guys. That was fun, as always.
Thank you.
Peter, good to see you. Ron, thank you. Nice tan.
Thank you.
Thank you.
See you later.